I'm Dave Mecklenburg from Tiger Shark Trading. Today we're going to talk about pullbacks, but before we begin, do want to remind you there's a high degree of risk in trading. If you've been trading for more than one day, you know that you can and will lose money trading. Only trade with money you can afford to lose. Again, most of you guys have been around, so you know who I am. Just want to remind you I learned to trade the same way as you. There's no book, no course, no webinar that's going to give you all the answers. You're going to have to figure out that last 5, 10, 15% yourself based on your particular needs, particularly level of skill, risk tolerance, available time, account size. And hey, I've been talking to people for 15, 16 years here. I'm an expert to help people like you lose money trading. So again, use me as a resource. I'll answer any question on trading. If I don't know the answer, I can point you in the right direction. Again, I want to remind you trading's hard. If it were easy, everyone would do it. If you believe it's hard, you're going to do a lot of things differently. A typical trader, someone who's new to trading, is going to blow out their account. If you believe it's hard, you'll do a lot of things to protect your account. When I say blow out your account, I mean fall below your broker's minimum, which could be only a couple thousand. But again, you'll do a better job protecting your principal if you believe trading's hard. With that, no one sells money printing machines. There's nothing I'm going to tell you today that's going to magically print money for you tomorrow. I don't have anything to sell. The other people who are selling stuff and telling you how easy it is probably aren't doing you any favors. I'm going to give you a good idea. You're going to have to investigate it further. This is pretty much the basics of pullbacks, but you're going to have to look into it in more detail, flip some charts, look at this day in, day out for a while, get in the reps. If you don't want to investigate it further, I guess it wasn't for you. If you're not interested in investigating any trading strategies further, then I guess trading actually isn't for you. Again, the only way you're going to learn this stuff is putting in some reps. Again, when you come home from the work, flip those charts, spend 10 minutes a day. You know how to trade after a couple months. All right, and hopefully the more time you spend with me, I can help you sniff out the nonsense. Keys to a trading strategy. I do this every strategy. This is the one strategy I have where all 8 elements are in this. Number one, we got to control our risk. Think about the downside before we think about the upside. Obviously, a stop was one way to do that. We'll talk about where to place a stop. Control our cost. Commission is the most obvious, but I consider wide spreads and slips to be a cost. So hey, we're going to look at liquid stocks. I generally focus on the S&P 500 so we can get a good fill. Simple is always better than complex. Hey, this is a really simple strategy. I consider this kind of almost the building blocks of strategies. Simple seems to stand the test of time, get outside the noise. Range, volatility, whatever you want to call it. You need to be trading things that move. Again, S&P 500 stocks, they move every day. We're not talking about penny stocks here. Heard the trend is your friend. Generally, that comes from pullbacks. Looking for an obvious trend. We don't need a trend, necessarily a big trend filter or a trend indicator. Like if it's going in one direction, that's a trend. Obvious move in one direction, that's a trend. Momentum, hey, that trend is speeding up. But the key here, like when we trigger a trade, I want to be moving in the direction of the trade I want here, right? We're not going to guess that tops and bottoms are in. So look, we're looking for a trending stock, and when it resumes that trend with some momentum, we're going to enter the trade. Confluence of leading indicators, again, when we talk about leading indicators, well, of course, all indicators are lagging if they're derivative of price. But what I care about here when we talk about leading indicators is, look, you know what your entry and exit is when you take the trade. So things that print across the price chart. Not things like MACD, RSI, stochastics, things that print below the price charts, things that print on the price chart. So it gives you your price levels when you take a trade. So some obvious ones, Fibonacci, extensions, retracements, Elliott wave, trend lines, major moving averages, the 20, the 50, the 200, even better, recent highs and lows. And if, hey, 2 or more of those line up, that's a confluence. right? It'd be a little more obvious when we pop up at the charts. And the last, hey, your target's significantly larger than our stops. As an individual trader, even the best traders are going to be right about 50% of the time. So how do you make money? It's because your winners are bigger than your losers. It's because you turned a winner into an even bigger winner, and you cut your loser as soon as it was outside of normal volatility. Right? We're wired to the opposite of that. We're going to have to train ourselves, get in reps, do the opposite what we're wired to do, which is to ride our losers, because if it comes back to break even, it's not a loser, right? The problem is losers become even bigger losers. We're also wired to lock in those gains a little early, and the problem is that winners become even bigger winners. We're also wired to want to be correct here. I just said you're going to be right about 50% of the time, so again, you have to put in the reps so that you're mentally comfortable losing approximately half your trades. Also wired to try to find the holy grail. Again, to be right 80-90% of the time, not going to happen. So let's look at pullbacks here. So again, elements of a pullback, we're looking for a trending stock, recent high or low. I do use a trend filter on my stuff. I like to be above the 50. Look, and the trend should be obvious, but if we were going to throw in a scan, sometimes being above the 50 would be a little bit more obvious as well. It's up to you whether or not you think you care about the 50 or the 200-day moving average. But if we're above the 50, generally we have a stronger trend. Looking for pullbacks off that recent high, 2 to 7 days. At some point, that's a trend, change in trend. So you got to cut it off at some point, generally cut it off at 7 days. And we're going to enter a resumption of the trend, right? We're not going to guess that that pullback is over. We're not guess that the bottom is in. We're going to let price tell us that the trend is resuming, basically taking out the high of that last pullback bar, or alternatively taking out the low of that last pullback bar if we're shorting. Right? We want symmetrical trading patterns, long and short, only opposite. So I'm going to show you how to run a scan. This is the scan I run. I do it in Metastock. This is Metastock. I'm going to read this to you. So though most of you probably won't have Metastock, you'll see how it's written and you can translate it to whatever you're doing. So in Metastock, we can say either high or H for a high. And if it's not today, so we can do C or close for close. But if we're not talking about today, then we have to reference it in Metastock. So we're referencing the high 2 days ago. And it's greater than referencing something that happened previously, the highest high value. High, H for high, or you can spell it out, 100. So what that actually says here is the high 2 days ago was higher than the highest high value, high 100, 3 days ago. We're putting in a new 100-day high is all that says. New 100-day high. So again, I'm looking for a recent high, and we're going to make a new high. Why do I do 100? Well, 250 or a 52-week high just seems a little too long. You're going to look at a lot of charts. You see a chart maybe roll over and then roll back over. So somewhere around 100 seems to work for me. You might want to jump on stuff quicker. Now, if you jump on stuff quicker, it may not be above the 50, but you can figure that out here. But if we wait for it to be a 250 or 260-day high, 52-week high, you're going to miss out on a lot of things. All right. Okay. And today's close is less than that new high. That's all it is. A pullback from a new high. Right. We're doing a pullbacks from 2 to 7 days. So, you do that for 3 days, 4 days, 5 days, 6 days, 7 days. Right. It doesn't get a little unwieldy when we kind of write these things. So this is a very simple, this is a loose scan. And just so you know, I ran the scan before we started, and 95, not so many here. Again, it was an up day. So, a few days ago, we'd had a lot, but pull back off a recent high. But Now again, the market's trending again, kind of putting a new high, so smaller numbers here, but 95. So we can do a tighter scan, and this is the scan I typically use. Sometimes I'll go to the loose one if I'm just short of stocks, but this is the one I use. This one had 39, so a pretty tight list. Normally it's closer to about 100 I gotta flip through. Again, you have a lot of false positives on these scans, but what I did here is we're adding an element here. So we got the same thing going here. New 100-day high is right there, right? And then today's close, see your close is below that new 100-day high. And then I threw in, look, today's close is less than yesterday's close. So we got a down day close to close, and today's close is less than open. So then a down day open to close. So we got a big red bar here. I'm just throwing in, right? Should we, if it's pulling back, again, this is long side, right? Opposite for short, is we're just looking for, hey, again, we need that down bar as our last pullback bar, right? Because we're gonna take out the high of that last pullback bar. So we do want something like this generally in our scan, if you can find it. So if I throw this in here, it does tighten up the scan, threw away over half the stocks we had here. But again, this stuff can get really unwieldy because you got to do it for 2, 3, 4, 5, 6, 7 days. Again, you could throw in, make it, if you want to be more specific, hey, today's high is less than yesterday's high. Right? Today's low is less than yesterday's low. So you could have all these criteria in it, but you're going to end up throwing away a lot of stocks. So good stuff. You're going to find that, hey, pullbacks aren't all by the book type of thing. It's going to be some inside days along the way, but hey, is it pulling back, orderly pullback off a recent high? And then your eyeballs are kind of built to look at these patterns, and you can just pop through this stuff a little bit more easy. Again, you're going to have false positives. So my list of 39 stocks on this scan, when I clicked through all of them, I ended up with 6 long and looks like 17 shorts. So went down to 23, 20. So, and we'll look at tomorrow's stocks as well here. But again, you're gonna have to flip through them, throw away the false positives. And again, your eyes are gonna be pretty easy to train looking for pullbacks. So again, this is meta stock. You can do something similar, whatever program you're using. All right, so again, we're looking for a trending stock off a recent high or low for shorting. Again, same rules, on the opposite. For shorting, above the 50 or below the 50, and pull back 2 to 7 days and enter on the resumption of the trend. All right, so let's just look at some examples here. So again, obviously trending. Look, this is the 20, 50, 200, above the 50 here. But again, it's just obvious. You know, hand this to a child, ask them which direction is this chart going, they're going to say up, right? So a recent high and then a pullback off of that. If we're using candlesticks, looking for red bars off this, right? And again, if we break the high, this last pullback bar, that triggers a trade, right? What happens if we got another red bar the next day? Oh, great, we got a better price. Same thing going on. Then the next day, that's the high. We break the high, trigger a trade. Oh, we got another lower low. Okay, that's fine. Again, better price, good for us. Break the high of that, trigger a trade. All right, so that's the entry. Break the high of that last pullback bar, trigger a trade. Again, we're using dailies here because it's applicable to most people, but you could do this on any time frame, any market. Right? So last pullback bar, break the high, again, the resumption of the trend is going to trigger the trade. All right, well, where's a stop on something like this? So sometimes that pullback low becomes a good stop. Here's the pullback low, this last pullback before our thing, but that's lining up almost exactly at our low here. A little probably too tight here. Maybe you want to put it on the back side of the 50. It's another reason why I like to have the 50 in these scans here, because that can act as support, right? Maybe it comes down and bounces off the 50. This is getting a little messy here, but we'll do this again on another chart, right? We got support there, stop on the backside. Hey, the target, kind of stay in that trend. Once we get the break even, we can start moving it out. How much space? stay above the 50, eventually move it out, stay above the 200 to stay in stocks for a really long time if we can't turn a winner into an even bigger winner. All right, new stock, clean chart, right? Obviously trending, recent high. Got a bunch of red bars here, great. Can break the high, that last pullback bar to trigger the trade. Here's your pullback low here. Again, it's a little probably tight on the back side of this bar here. You could do this other pullback low. Puts us on the back side of the 50, gives us a little extra room. Again, we can see this as we take the trade, makes it a little obvious. Again, try to stay in that trend as long as possible. All right, again, recent high, pullback, break the high of that last pullback bar, sitting right above the 50 here. We got this little consolidation, probably be a good stop, put us on the back side of the 50. Want to make sure these stops aren't too big, so always check what that actually ends up being. A couple bucks, probably pretty good. Try to hit a big winner. Right, again, same thing going on here. Right here, you get these inside days. I know it shows up as a red bar here, but that's an inside day, not a perfect pullback of always lower lows, lower closes, lower highs. But the stuff's not going to be. It's going to be a little messier, and again, your eyeballs will be okay with it. But when you program that stuff, maybe it doesn't kick it out on your scan. Right, recent high, break the high of this last pullback bar to trigger a trade. Maybe stop on the back of this last pullback here. This pullback low, which puts us right on the back side of that 50. Great. Gives us some room on our stop. Right, so here's an example I have in here why I use 100 days. So hey, something rolled over and then it rolled back up. Right, so this isn't a 52-week high here. Right, we can see highs over here. But we got a nice trending stock. We're above the 20, 50, 200. The 200 is still above the 50 here. But here's our recent high. I have this in here because I already would have triggered. So here's our last pullback bar here. So break the high of that, triggers a trade. So it would have triggered here, triggers a trade. Hey, maybe in this case, the stop's in the backside of the 200 to trigger that trade. All right. Hey, short, same rules, only opposite. Obviously downtrending stock. Here's our recent low. If we break the low of this last pullback bar, that's going to trigger the trade. Hey, stop on the backside. Here's your swing highs right here. Puts us right below the 50. Maybe we want to be on the backside of the 50 for more space. In this case, maybe that's a little tough, backside of the 50, giving you a stop of $6, $7. Might be a little too much. Something like this. Hey, if stop's too big, throw it away. Don't have a good setup of reward to risk. Again, our winners have to be significantly bigger than our losers, so we can't have giant stops with small targets. So you toss it out. All right, so here's again, downtrending stock. Here's our low. Got our 3-day pullback here, triggers a trade. Now we're in that trade, right? Here's our pullback high here. Little tight, but maybe what you want to go for here. Small ranges on these bars, it's probably wide enough, especially on a stock you're short and that's only around 20 bucks. All right, so just some examples, kind of to the point on this. We can look at today's stocks. So I post the list on the website here under pullbacks here. I didn't get a chance to post it before we did this presentation today, so I'll get it done when we're done. Get it posted when we're done. But this is the list. Again, tighter list. We got obviously a trending market here, putting in new highs. So, right, when a market's trending and then you get these other days, these pullback days, that's when we end up with, you know, nice big lists now. But it's trending again, so we're going to have smaller lists here. But we still got some stocks that are going to pull back. So you can see this, pretty easy to see. I'm going to blow this up a little bit. So sometimes, hey, perfect. Got all these red bars, lower lows. This one's kind of an inside day here. But red bars make it easy to see this stuff. This one's not so perfect, a little messy, popped up. But Again, pulling back off a recent high with our down day. This is also a little messy. So sometimes you gotta scrounge around for stuff here. Right, we got this actually reversal day. It's a green bar, but it's actually a down day here, filled in green bar. So I count that as 2 down days. This is GE, right? Pulled back a little bit, but putting in lows. So I do want this red bar to be the low too of that pullback, the low off this recent high. All right, this one's kind of borderline as well, but sometimes you end up with that if you're reaching for stocks here. Again, I only came up with 6 on this. So the only really nice, perfectly looking pullback here is this Boyd. So again, break the high of that last pullback bar. If it does that, stop somewhere on the backside. Our pullback low is all the way down here, but that's only $3 bucks away. Might be okay. Maybe something even tighter is on the backside of this. Now we're up to maybe $3.50, but you got a confluence there of the 50 and the 200, and we're the backside of this pullback low. So maybe that's a better spot to do a trade. Now the issue is the stop too big? What's our target to be at something like this? Long side, we're probably okay. Stop looks like it's only $3.50, but that'd be a good place for a stop probably, or stronger spot. More resistance, or sorry, more support if it bounces down on the 50 and the 200. Right? And we want to try and stay in these trades as long as possible. I'm not a fan of just holding for a couple of days. Right? So, hey, once we've got enough room to move the stop to break even, we're going to stay above the 50 and eventually move it out to the 200, and you might be able to find a big winner, meaning you might be holding positions for a couple of years. Hey, if you caught Apple 10 years ago, you might still be in that trade. So again, general stuff going on. Downside here, the only difference on the downside is the targets. Instead of saying, hey, look, I'm looking to hold kind of indefinitely as long as I can stay in the trend, downside is probably want to get inside some recent lows. So here's our lows from last year down here. Really not that big of a target. So maybe you don't want that. But if you can find some stocks that have some of these lows, we're kind of putting in new lows. Okay, so here's some targets down here, and that can kind of be your initial target. Now you don't have to do that. You can just say, look, if something's falling off a cliff or it's putting in new lows like this did, then like where are you and how much further do you have to go? So this one might not bad. It's kind of falling off a cliff here. But you want to make sure that price is high enough, right? 35 we're okay. But if you find a stock like this and the price is already $8, you know, there's really not much of a target on that if you even could short it. All right, so very simple to the point. Again, really building blocks of your trading strategies. Any time frame, any market. You want to do this on 5 minutes intraday, you can do that. 5 minutes, 10 minutes, 15 minutes, any market. Again, something trending, and then you're just looking for a better price and then the resumption of the trend.